Well, speaking of earnings, several major banks are set to report first quarter earnings this week, and judging by the markets today, they're not too optimistic. Yahoo Finance's own Alexandra Semenova joins us now with more. Alex, what can you tell us?
Yeah, Rochelle, bank earnings are getting the ball rolling on this earnings season later this week with a bunch of big reports due out on Wednesday and Thursday from JP Morgan, Citigroup, Goldman Sachs, and others. But the numbers are expected to be underwhelming, especially after the profit boom that the industry saw last year. According to projections from S&P Global Market Intelligence, U.S. bank earnings are expected to fall by 8% in 2022, namely after getting a huge financial boost last year from releasing reserves set aside for potential losses during the pandemic. Now, as the economy recovered and losses proved less severe than expected, big banks began to release some of those reserves, which padded some of those numbers that we saw in 2021. In the third quarter, for example, JP Morgan reported a profit of $11.7 billion, which would have been about $9.6 billion if it weren't for $2 billion in reserves released during that time period, which that number would have been flat from the prior year if it weren't for those reserve releases. So last year, banks also benefited from strong deal-making activity, but investment banking revenues are expected to decline amid the war in Ukraine and the shift towards higher interest rates weighing on markets and postponing some of the deals that may have been in the pipeline. We could also see some losses on trading revenue due to the sharp swings that we saw in commodities this quarter. Banks stand to benefit from the Fed's interest rate hikes, and investors will be looking for an increase in net interest income and net interest margins as a result of those hikes, which in short is the money that the companies make on lending activities. They'll also be looking for stronger loan growth after banks' lending businesses took a hit during the pandemic, but these factors are not expected to be enough to match the tailwinds of strong deal-making revenues last year and the financial boost that banks got from reserve releases. So we'll be seeing those numbers come in a bit lower this year compared to last year's. Rochelle.